Good morning, everyone, and welcome to the European crossover webinar. And we're seeing the euro uh, get back above 111. One of the things I covered in the analysis 2 days ago, we had moved in the euro, and then we had the our resistance at 1107, and then the market paired back. So that was a few days ago. And then I was mentioning, I think it was Wednesday. I put on there that hey, it's key for the euro dollar to defend 1074 on the close, and it actually did. I mean, not by much. I think it closed above it by 2 pips, but it was key for it to defend that. So I go, it's the one thing that bulls can try and hang their hat on as long as they can defend that level, and they did. And then we added on. We were able to get above 111 yesterday in a relatively tight range, but we were able to get above it. And today we're seeing the market, well, right now at 1108. Now, may not sound like a whole lot, but it's better than being below 1074. So there's still the potential for this thing to go on and move higher. Going and come to here. Hold on. There we go. One moment. So you can see here with yesterday's move, not yesterday, well, yesterday, yes, but the day before, you see how we came right. We made it up there and we got turned away. Remember, our buy chart resistance had been 1107, and we made it up to what I think is 1116, and we got turned away. And I said, hey, look, it's not good if they close below 1074. And they're able to manage to keep their heads above 1074. I think the close may have been like 1076, something like that. And yesterday we pushed higher. We were able to close just above 111, and we're seeing the market in a very tight range stay just above that. So, good news for those that are bullish the euro. The big story here is obviously the cable. This thing has just gone on and on and on. To me, it's something else, the way it's been able to just chomp right through these resistance levels. We talked about the significance of 2980. We've been talking about that for literally for months. Well, for months. I mean, I would say actually for over the last couple of weeks or so, maybe 3 weeks. Because obviously once we broke below that, but we revisited, and as I mentioned yesterday, we had actually challenged it on three separate occasions. 1, 2, 3, and on the fourth, it finally broke above it. And we're talking about, hey, look, if we get above it, next level of resistance is going to be 3050. Man, they closed above it. They went right through 3050. And then when we got past, which was yesterday's, which was 3150, and it looked for the market, I thought it was going to stall there, but we're still holding up very well. I mean, so not that we can't see the market kind of weaken from there. 3150 was our buy chart resistance. But one thing that was, interesting, I don't know about interesting, but looking at here on the 2-hour chart. You know what the hell? Doggone it. There we go. Okay, so I talked about this yesterday, and we were looking at a gravestone doji at the time. So he's not pulling back very far at 3150, and then the market ended up coming right up to 3150, and I think it was this bar here. Looked like it's going to be a gravestone doji. Comes back. I mean, we were dipping down. Looks like it's going to be a potentially gravestone doji, only to turn around and close up solid on the day right here. just above that 3150. And you can see here, we've been sitting here, sitting here, sitting here, sitting here, and here, sitting here. And now we're kind of starting to slide a little bit. But the next key level up here, which is the target, the intermediate target on cable. I don't know what the heck is going on here. It's really ticking me off. There you go, which is 3208 right here. That's the intermediate target. Now, I mean, I thought potentially we can get there, but I didn't think we'd get there, or we're not there yet, but this quickly. I mean, as I mentioned, we've been just chewing right through these resistance levels here. But we did look to stall. We're stalling here right now around 3150. As I mentioned yesterday, we came up there and it looked like this bar was forming like a gravestone doji, only way to turn around and run right back up and close above, or right just a bit above 3150. And then we just sat there and sat there and sat there. Now we're kind of getting back a little bit. But the interim target, as I mentioned on this pair, because we could go much higher. And we talked about the amount of time that we spent, right below 2980. And look at this. You can see how long that range is. That the longer you spend, is the more likely that you're going to push much higher. So I don't doubt we're going to get to 3208. I'm just a little bit surprised we got there this quickly. We can still move even higher, I suppose. I mean, potentially we can get up to 3340, but that'll take a little bit of time. But we've had a pretty good little run today. We'll see whether or not we can make it up to that interim target, which is going to be 3208. Let's go on. S&Ps will continue to move higher here. We talked about this yesterday. I talked about my areas. I was looking at 3124, which was going to be my stretch area. We had come up to, I think it was right at 3124 or 3124 and 3/4. We actually came up to, I think, 3123, did back, came up, challenged to 3124 before falling back. And remember, my stretch area, we had a stretch for 3124 from the day before yesterday. And then I mentioned yesterday the area, I said, be careful, this market can get up to, once we held from the day before, I said, hey, look, this market can get up to, an area of 3124 to 3128. And we actually just about got up to 3128 this morning before pairing back to about, 3121. Now we're at 3125. And I think today we could, as I mentioned from a couple of days ago, don't be surprised if we were to close. I might have mentioned it yesterday. If we close around the 3130s, and my take on that, and that's why I was cautioning people, or cautioning to say, wouldn't really want to be, wouldn't want to be short. And that's why, like I said, the first day, and I did mention that you'd have to take a day to let this news digest, and from a technical standpoint. And we did pair back to 3107 after a move, and then we've reasserted ourselves, because the deal is if the China and U.S. are wrangling over how much the farm subsidies they'll buy, then we're probably pretty close to getting something. To me, I've been saying there's no deal coming. And I still kind of question all that, but the point that whether it's true or not, but if it is, that they're wrangling over how much of the farm products they're going to go and purchase, then it means they're pretty close to a deal. The deal still may not be close, because to me, the big fly in the ointment is, and that might be legitimate and not a bargaining or negotiating ploy by China, and we're saying, hey, they're going over how much that they're going to buy. Why the hell does China need to buy that much as far as farm products? They just signed a huge deal, an absolute huge deal with Brazil. I mean, so this whole trade thing is just a mess. Okay, it really is. They already signed a huge big deal with Brazil for soybean meal. If you saw the stories in Reuters, Brazil was saying, man, this is a fantastic deal. This is just huge. This is a mega deal. I mean, this is something that they did not even expect. So they've already signed a big deal. Literally a deal with Brazil on all this soybean meal. They don't need to buy anymore. That's what I'm saying. So in a sense, there's this part that they're probably, the thought would be if they may be closer because they're, going back and forth about how much soybean meal, how much products they're going to buy from farmers. But in a sense, that's legitimate now because they don't need to buy too much. They've got a big deal already in the works. They're going to have more than enough. So, like I said, we can easily find ourselves back on Monday saying, well, we still don't have a deal. And then maybe, as I said, we get to, let's say, Tuesday, then we start to see the market start to maybe rotate lower. And like, when is this deal coming? And the market just waits. But like I said, going into the weekend, I could see where the market, no one wants to fight it because what if they were to make an announcement over the weekend because they seem to be so close if they're going over China, over how much they're going to buy from, how much China is going to buy from farm products. But I'm questioning that is probably, it's legitimate and seems like that's something that they'll be at the very end where you're negotiating the last bit, but maybe not so because, like I said, they've already signed a big deal with Brazil that really is going to leave the American farmers with empty pockets. So that's probably why they're saying, no, we don't need to buy that much. And they're probably, it's not so much, they probably would buy that on the short haul, which is over the next, month or 2 months or 3 months. They're probably looking for them to commit because now negotiators already realized they already bought a whole lot from Brazil, and they're probably looking for them to make commitments that go way beyond. And China's like, no, we don't need it. We already made a big deal with Brazil. We don't need that stuff. So, I mean, really, they left the administration really left the American farmers with nothing in their pockets now for the long haul. Because anything that China offers now is just going to be something that is just over the next 2 or 3 months. They've got a big deal set up with Brazil, so they don't need the American farmer that much at all, to a certain extent. So that's where we stand. Let me go into the news stories. We'll actually touch on to the onto the new data coming up. And the reason I spent so much time with that story because it is a big deal. Because once again, I wanted to put things in perspective. Because, like I said, we did come into a very key level on the pullback, which was the 3074 in the S&Ps, and we've come back up, and then we rallied quite a bit. So, when we jumped up to what was in the 31, at the time we rallied up to about 3108, we came back to 3101, then we rallied up to what was 31 teens, and then we dipped back, or actually the upper teens. Remember, I was looking for 15 to 18. We came back down to 07. We reasserted ourselves. Remember that stretch was 24. Now here we are at 31.28. And like, wait a minute, this really thing is going a little bit far. Well, no, because we're coming into the weekend and no one wants to be short. But the same token, I'm not looking for this deal to be done so quickly at all because of that, because China did sign that big deal. It makes a big deal, and for a perspective, as I mentioned before a couple of days ago, or maybe it was yesterday, I wouldn't be surprised when we close in the 3130s. But looking further out, it probably looks like we're very close to a deal if they're negotiating, but I don't think so. So I think you can see the S&Ps maybe start to run out of gas on Monday or Tuesday and start to rotate lower, thinking, well, when's that deal coming? But anyway, that's where we are. So anyway, moving on to today. We did have French data out. I don't think it's moved the market that much. I mean, we have NFP today. We do have Italian retail sales They came out at, just at the top of the hour that we just had. But we do have, which obviously is the big deal, the non-farm payroll. The Reuters poll is 180,000. For the Reuters poll last month was 128. Unemployment rate was 3.6. They're looking for 3.6 again. Average hourly work hours 34.4, which was 34.4 last time. Canadian employment data is going to be out there looking for 10,000. The prior was minus, they lost minus 1.8 thousand. So we're going to see a lot of movement. University of Michigan comes out at 10 a.m. Eastern. The last month was 96.8. They're looking for 97. So that's where we stand. And we do have wholesale inventories, 10 a.m. Eastern also. So let's go move into the stories. Anyway, I just want to, I thought it was important to go on to that because I think, once again, like I said, I think it's important because we've already rallied back so far and everybody was questioning. I've said already that there wouldn't be no deal coming. And everybody's like, man, these markets are so stupid, they keep falling for it. Well, if you're, like I said, what they're at, going over now seems like something you'd be negotiating at the very tail end and thinking that the announcement would come in potentially over the weekend. But I don't think it's going to be that close. But I can see why the market would be up at this level. And we may even push a little bit higher if we come into the weekend. Let's go move into the stories. Japan household tightens purse strings as sales tax typhoon hits. This, and I want to cover this story also because we are seeing the dollar yen, start to weaken a bit in here. And I did the analysis overnight, and I kept the same bias chart resistance that I had from yesterday, which was 893, and it looks like the market topped at what, 899. And we're right now currently at 862. So let's go on and touch into that, and then we'll get into the analysis. So Japanese households cut their spending for the first time in almost a year in October as sales tax hike prompted consumers to rein in expenses and natural disasters disrupted business. So once again, you'll see the yen strengthen. Household spending dropped 5.1% in October from a year earlier, government data showed on Friday, down for the first time in 11 months and the biggest fall since March of 2016, when spending fell 5.3%. It was also weaker than the median forecast for a 3% decline. That marked a sharp reversal from the 9.5% jump in September, the fastest growth on record as consumers rushed to buy goods before October's first sales tax from 8 to 10%, goes from 8 to 10%. This has been I know every year the Japanese are always looking for, okay, things are going to get better, there's going to be more demand. Every year they look about this time before they have, this is an annual thing about this tax changes they always have. Anyway, that being said, that marked a sharp reversal from a 9.5% jump in September, the fastest growth on record as consumers rushed to buy goods before the October 1st sales hike. I just said that. Not only is the sales tax hurting consumer spending, but impacts from the typhoon also accelerated the decline in spending, said Taro Sato, executive research at the NLI Research Institute, which is a pretty key institute in Japan. We expect the economy overall and consumer spending will contract in the current quarter and then moderately pick up in January through March, but such recovery won't be strong enough. Household spending fell 4.6% in April of 2014 when Japan last raised the sales tax from 8% from 5%. It took more than a year for the sector to return to growth. Compared with the previous month, household spending fell 11.5% in October, the fastest drop since April 2014, a faster decline than the median at 9.84%, 9.8% forecast. Analysts said a powerful typhoon in October, which lashed wide swaths of Japan with heavy rain, also played a factor in the downbeat data. Some shops and restaurants closed during the storm and consumers stayed home. Separate data also showed the weak state of the economy. The index of coincident economic indicators, which consists of a range of data, including factory output, employment, and retail sales data, fell a preliminary 5.6 points to 94.8 in October from the previous month. the lowest reading since February of 2013, the cabinet official said on Friday. It was also the fastest pace of decline since March of 2011, according to the data. Real wages adjusted for inflation, meanwhile, edged up for a second straight month, but the higher levy and weak global economy raises worries about the prospect for consumer spending and the overall economy. So once again, like I said, I guess you can look at twofold. I mean, you're seeing the yen strengthen, but weak economy. For someone that's looking even much further out, might say, "Oh, we'll get that stimulus that they've been rumored about talking about." It was in the news a couple of days ago. But anyway, that's the take there on Japan, or i.e. the yen. And moving on to the sterling. Sterling hits 2.5-year high versus the euro as markets price conservative election win. Sterling hit 2.5-year highs versus the euro on Thursday on growing confidence that next week's election will give the Conservative Party the parliament can't even speak. Holy smokes. The parliamentary majority it needs to deliver Brexit, ending near-term uncertainty. Recent opinion polls suggest the ruling Conservatives will win an outright majority in the December 12th election, removing some of the political uncertainty that has weighed on the currency for the last 3.5 years. Prime Minister Boris Johnson called a snap election to break an impasse in Parliament over Brexit. A majority in Parliament for his Conservative Party should allow him to get his withdrawal agreement passed by lawmakers and take Britain out of the European Union by January 31st deadline. The broad trend in the polls is not really changing now, and Conservative lead on my poll of polls is about 11 percentage points, which is reasonably sufficient to get them a reasonably decent majority, said Adam Cole. With only 1 week to run the election, if the trend in the polls stay flat, then sterling probably keeps going up. Sterling was up 2 tenths against the euro at 84.39 pence, but early in the day it touched 84.31. Against the pound, the dollar, the pound rose 4 tenths to 31.44, having climbed again as high as 31.59. Analysts said the breaching of the key technical levels on Wednesday around 130 and 85 pence per the euro had accelerated the pound's gains and encouraged traders to cover their shorts. Investors will still say the pound is cheap and could rise further if Conservatives eventually secure a majority in Parliament. So let's just go and move into about the dollar. The dollar drifts down as investors eye payrolls and a busy week ahead. The dollar headed for its worst week since October on Friday, dragged down by nervousness in trade and hints of weakness in the U.S. economy, with domestic factors leaving the resurging Kiwi and British pound the main beneficiaries. The safe haven of Japanese yen and Swiss franc were also in demand as investors fretted that U.S. job figures due later in the day may fall short and braced for a week that brings a British election, a U.S. Fed meeting, and likely news to trade. There's a lot of event risk to navigate, said Richard Franglovich, head of FX at Westpac. I stand to be corrected here, but I think the next week could possibly be the most consequential week for global markets this year. Movements on Friday were quarterly slight in Asian trade, but against a basket of currencies, the cash dollar index has dropped every day this week for a cumulative loss of about 1%. Trump remained upbeat overnight on trade and said talks are moving right along. Markets are unconvinced with worry stemming from a lack of similar enthusiasm from China. And that's the spin of it, if you want to call it, not spin, but the gist of it. And I mean, I'm not trying to sound political, but, you can't trust what this guy says. One day he says, we don't care. I don't even want to, maybe I don't even want an agreement. We'll wait. Maybe it's best just to wait till the next, till after the election. Now they said, the very next day he's like, oh, everything's going great. I mean, so, but like I said, the one constant is, like I said, is that China is like, there was that headline that came out that they were just negotiating on trying, these farm products, but I think it's something that's still a sticking point. But why we're here now is because it would suggest they're closer than they were, but I'm still questioning that. I don't think we will get a deal. I think we may find ourselves exactly where we are right now come Tuesday. We shall see. Markets are unconvinced with worry stemming from a lack of similar enthusiasm from China. Chinese officials reiterated their stance that some of the U.S. tariffs must be rolled back for deal, something Washington has given no sign of doing. The focus on U.S. non-farm payrolls comes after dismal data throughout the week showed private payrolls, soft services activity, and a shrinking manufacturing sector. Reuters poll shows a forecast of 180,000 jobs added in November, and a miss might have the Fed considering its wait-and-see mode when the committee meets on Tuesday and Wednesday. So it's going to be one of those things like maybe like good news is bad news because maybe they'll, give it, a little bit more help, which don't really need to, but that's will be the market's perception. Markets are in a highly fragile condition at the moment, said Michael McCarthy with CMC. There's a greater potential for an exaggerated move if we see a big divergence from expectations. The risk is in both directions, below 150,000 or above 200,000. We can see a significant market reaction. The dollar's weakness and the sterling strength. The week the greenback has shed 0.8 versus the euro, sits at 11.06 per euro on Friday. The Kiwi just sits below a 4-month high, touched at 65.59, having gained 2% this week as economic indicators have turned positive, reducing the likelihood of monetary easing in February to just 13%. So let's go and move on to the analysis. So it says the euro has held its own on Thursday, managing to close above 111. Resistance on Friday will be 1130. Support is 1055. So I don't want to go overboard. I mean, like I said, we do have non-farm payrolls, so generally we try and allow for a little bit further moves potentially, but we're going basically right here on this and coming up with right there. Coming up with, you see this touch coming across here. We're not going overboard. It's not that the euro couldn't take off if the dollar, which we're going to go and cover into that. We're just about, which has been this week's target, 11 is 97.20. Not that we can't shoot beyond that, but we'll get to that. But we could see the euro start to add on. I mean, maybe we garner some momentum before you know that the euro's up and going. But once again, I'm taking into consideration the type of ranges we've been seeing. And, last week was just absolutely abysmal. Like I said, I'd have to say that probably last week's, and I mean that with sincerity, is that last week's range was probably the tightest range in the history of the euro. I'm just saying, I've never seen it that tight, and there's no doubt that I believe that that was the tightest 1 week range we'd seen in the history of the euro. So, like I said, I don't want to go overboard, but we could potentially move higher. But today's resistance is going to be 1130. Let's go there. Now, don't forget that we were looking for, at the beginning of the week, when the euro looked better, we were looking for an interim target of 1154. So I'll tell you what we're going to do is we're going to put the resistance at 1130/54. 54 would be key, but that was our target, interim target, as we began the week, and then the euro kind of like laid an egg. And support is 1055. I'm dealing with the situation. It's painful. Hang on. I need to take some Tylenol. Hang on. So on the cable is scaling resistance levels by the day. 2980, 3050, 3150. Up next is the interim target, which is 32.8, and you can see that right there. We discussed that at the beginning of the show. Support is now going to be 31.10, so we're not that far away from support. I mean, not that far away, but this thing has just been chewing up resistance levels like nobody's business on a daily basis. So we're going to go for the interim target, which you can see there at 32.08, and support will be 31.10. So we're going. And with that, let's go moving to the Aussie. Okay, the Aussie pared back its recent gains with support on Friday, coming in at 68.09, and resistance is going to be 68.65. I mean, we're still in a relatively tight range. You can see it basically consolidating these gains it's had, so no real big changes here. Let's move this down here. So support's going to come in at 68.09 with resistance at 68.65. We actually had it at 60.08 yesterday, so we'll keep that. And we're looking for resistance. As I mentioned, it's going to be 68.65. And we actually had that yesterday for 68.68. So I'll tell you what, we'll just keep that in check. So yesterday's bias chart support is 68.08, and today, and also resistance 68.68 is going to remain the same. With that, let's go and move into the Kiwi. Wow, this thing is just up, up, and away. Look at that. Unbelievable. So the Kiwi continues its ascent with the next key level of resistance on Friday at 65.76. We're just about there. Support comes in at 65.20. So it's going to be 65.76 for resistance on the Kiwi today. Oh, God. I should have taken some Tylenol. And boy, this thing has just really continued to ascend. Let's go and move on to the Balacad. So the dollar CAD has had level 31.36 attracting before value buyers are expected to appear. Resistance on Friday is going to be 32.05. So we can certainly see the volatility today because we do have Canadian jobs data, but you can see here the 31.36. I'll pull that into a bit closer there. You can see the significance right here with the 31.36. I'll move that. a little bit closer here. There we go. So you can see the significance of this 31.36 huge. And that's has been our target right now after the dip from yesterday. Up to the day from the day before yesterday. We started to break down. Potentially we could get there, and certainly looks like that actually is our bias chart support for this morning, which is where I think you would see value buyers now start to come in. So we're looking for 31.36 on the downside. And on the upside, 32.05. We can get some whippy volatility today. Or I should say whippy moves. But we have seen this one bar, I don't want to say shouldn't be a surprise, but some continuation, yeah, sure. Because remember, I think this was Friday, we had what looked like a gravestone doji. We looked like going to pair back. We turn around, we rally up and take out, not only we rally up, but we even take out the week's close here. You see that? The best close. And look like, okay, now we're on our way. The market moves up and it kind of stalls. And then once you hit all these stops, anybody that ended up buying or whatever, they all got all stopped out. So a little bit further continuation. So once again, I think if we do see 31.36, then you'll see some value buying start to come in at that point. But like I said, we have employment data today. So, but that's going to be about a level of interest, even if you're only day trading it. Let's go on. Bring that back up and move into the peso. Okay, no changes here on the peso. For the last couple of days, been looking for a move to 1934. That's where we're at. Hey, you know what? Bam, 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 boom. That's it. Going to stay with that. 1934 on the downside with the peso, and on the upside, 1952. I can probably rein into 1952 a bit, so I'll drop the 1952. No, I'll tell you what, we'll just keep it the same, 1952. But we're already at 1934, but you know what? Going to leave it there. That's been the bias chart, and it's going to remain the bias chart again. So. Let's go move into the dollar yen. Well, to recap the week, so to speak, we closed the power week above the pivot. Oh, God, it hurts. Above 927, and then we kind of stuttered there, and we were talking about a daily close, but back below the pivot would open the door for 851. We got the 851. We rallied back, and my bias chart resistance has been the 893. But yesterday we made up to 109. So my 893 is still the same for today. I kept it for the Asia analysis. 893, and on the downside, I think we're looking potentially to 808. Oh, maybe support is 810. So yeah, so it's going to be 893 still remains the resistance. What I put immediate support is 810. So let's see how this all plays out. Should be a reasonably volatile day today across many of these markets. Let's go and move on to the dollar index. And I'm looking for a move down here to 97.20. And just like the euro, what I'm gonna do is I'll put it 97.20, which it can get as low as 97. So let me mark that on. Now, the reason we got there is, like I said, a daily close below 97.79 would open the door for a move to 97.20. We did get that, and we've just been gently going lower, lower, lower. I think we'll get us eventually to 20. Potentially, we could stretch it up to 97. The same way the euro. Conversely, resistance is 11.30, but we could make it up to 11.54. And resistance is going to be 97.79. That was that key level. I said if we got below 97.79 on daily close, that would open a move to 97.20. So it's just straight up technicals. That's it. Let's go move into the cross rates. Well, we're back revisiting 71.45, and that was a bias chart resistance from the day before, and it's going to remain the same today. No changes. 71.45 bias chart resistance here. You can see that 71.45. No changes. And support. The difference here is short-term basis support. It's going to be right there. Then 70.68. We'll move that up a little bit higher. Let's go move into the euro yen. No changes here in the euro yen. Look at that. Look how tight we are. Look at that. Bit of a tug of war here because the euro is kind of strengthening a bit, but the yen is also strengthening. So tug of war, and not a surprise that we're trading in such a tight range. Boy, what a tight range that has been. 20.89 on the upside, 20.30 on the downside. Just a very, very tight range. Move on to the euro Aussie. Interesting day in that, look, we finished near the lows day before yesterday, only to turn around and rally back up, and now we're stalling here. So we had 62.40 on the upside. We did make a run up in here. Resistance, you see where this closed and this one opens right there. That's going to be, and that's actually just maybe a couple of pips above the day's high. So it's going to be 62.60 on the upside. Downside about 61.76. I'm going to keep that there, 61.76. And let's go on to the Euro Kiwi. And we've even gotten below the 68.42. Remember, that was an area that we're looking at. We had revised that down to 61.76 for support. And And I mean, I meant to say 69.10, but we're just actually the low yesterday was 68.87. You see right here where we had this close here, right there, and almost like an open right there, right there. That's 68.70. That's going to be the support right there, 68.70. Be interesting to see whether they make it down there or not. That'll be the support. But the strength of the Kiwi, I mean, we had the 69.42, and we got there, and we've continued to move. We got below it, and then we closed above it, but here we are challenging back below it again. Let's go and move into the Aussie yen. And let's take a look on the upside. Hang on. Let's see here. Yeah, it's going to be right there. 69.93 on the upside. Let's go on to the Aussie yen. We're trapped in a very tight range, and we've moved higher, but once again, a bit of a disappointing move when you think how well the equities have done. So I'm not looking for any changes here on this. 74.73 on the upside and 74.02 on the downside. We're not too far away, but look at this range. Holy smokes, look how tight that is. That is just unbelievable. Wow. A 22 pip range. Holy smokes. This pair used to be a real flyer. Let's go move into the guppy. Well, you can see here they're not too far away. We actually just about nipped it yesterday, which is our resistance level, which is 43.36. You can see that. See it right there, 43.36. We just about got there yesterday. That's going to continue to remain the bias chart resistance and support. We had for 42.64. We're below that now. Let's take a look on the 2-hour chart. You can see, look at that. You see that high here? They just nipped it right there and just popped off of it. So that low, we're just going to go with that. You see that? See how this high here, we come back down, and look at that. They went right there and took it out by maybe a pip, or actually right to the pip. So we'll go with that, 42, we'll go just 42.40. But you can see where they found that demand. And lastly, sterling on. Well, there's that 127% extension that we had at 92.45. We're gonna stay with that. The close was right here, was 92.53. So just move with that close, 92.53. Monkey pairing back just a bit. And on the downside, be right there. 90.71. That seems like too close. Hold on. I'm not too close, I mean way too far. Let's go and move in here in the 2 hour. See this cluster right there, right there. That is 91.35. And there we have it. Today's non-farm payroll should see some good volatility across not only the CAD, the Euro, dollar index, dollar yen. But that's all we have for today. I've already went on and on and on about the indices or the S&P specifically, and we'll see where the rest takes us. Thanks for joining us here on the European Crossover webinar.